Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, June 17th, 2025. Today's episode begins with our headline, Unconditional Surrender, says Trump, talking about Iran in that situation. Plus weak retail sales really shook markets today. Both of these things combined really explain everything that happened across markets. We'll get to the charts when we get there. First, I want to go over the core retail sales in May. This excludes food and energy being negative 0.3%. The market was expecting actually positive 0.2%, while the last month rating of this was at 0. And the headline was negative 0.9%. And then if you dive a little bit deeper into it, you can see the retail sales minus gas and autos was only negative 0.1%. So in other words, a good amount of the core retail being down 0.3%, while, you take out gas and autos only being down 1%, we can only surmise that it was actually autos that sort of brought this down more than anything else. Consumers are supposed to be loading up on cars right now because of the unpause of the extra tariffs coming up in about a week, and they're not doing it. Just yesterday we talked about the manufacturing doing the same thing yesterday from the New York manufacturing survey. For me, this adds to the signal that there is a lot of recessionary pressure coming sooner than later. The way that I look at it, it's clear as day how all of these things affected markets, and we'll get there when we get to the charts. Before then, community topics. What moves, if any, did you make today? Robschild essentially sat on hands, didn't really do anything. Coming up, remember, tomorrow we have the jobless claims, initial and continuing claims, because Thursday markets are closed. Usually that comes out on Thursday. I won't be doing a show on Thursday, obviously, because markets will be closed. We also have continuous tariff updates, one federal budget update that we'll talk about when we get to the silver chart, and then, of course, the Iran-Israel conflict updates. From what Trump is saying, unconditional surrender suggests pretty heavily that the U.S. is now ready to step into this if they feel they need to. My feeling on the whole thing is that, I'm no geopolitical scientist, but just from what I can see here, it's pretty obvious that the U.S. wants them to handle the situation. But, if push comes to shove, the U.S. is there to back up Israel. We'll get to the charts in a second. Before that, thank you for watching, subscribing, commenting, and supporting. The subscription button's right over here. I'm real close to that 1,000 subscriber mark. I'm really excited about it. Thank you for all of your support. No changes to the daily reminders macro view. See my website in the description. And no changes to the crystal ball ratings nor the Robschild portfolio. We'll start with a heat map today. New thing on Robschild. I haven't really used heat maps before, but they are really useful. Things can stick out. Most stuff was red. In other words, most stocks went down, except for notably LMT, Lockheed Martin, obviously, with the potential going into war. Obviously, the stock's going to go up a little bit. And, with this escalating a little bit today, not showing sort of as much ending, energy is going up as well. With higher oil shock risks, energy stocks are going to get a bid. On to SPX, the S&P 500 dropped by 0.8% today. I've been saying it's been starting to lose some momentum to the upside, and even CNN, their business fear and greed index, finally dropped to a neutral stance. I was kind of curious, why are we still in greed mode? It's a little slower than, my moving average sense of where things are going. So we're finally in neutral. This seems like where we should be. And the VIX getting a minor pop today. The options fear index prepared to move higher or lower is where it stands. This is all about, are things still escalating with the Iran situation, or are they not? That's just what this market is clearly saying. I'm surprised at the resiliency still of, junk bonds, high corporate bonds, high yield corporate bonds. When you divide it by SHI, you can see where credit spreads are on a minute to minute, day to day basis, and they spread like a little bit. But just to remind everybody, we're in the higher range here, and as of Monday, we're still at 3.1%. This is like still not pricing in not really any turbulence coming up. I think that this is complacent. We'll see how it pans out. TLT, my favorite place to be, got a bit of a bid today, going up 1.2%, still inside of this channel. Before I believe that this channel won't end up breaking to the downside, I'm going to need to see TLT actually get above this channel for me to be more confident that TLT may have more shorter term legs, stronger legs to the upside. We're not quite there yet. I think that time may be coming sooner than later, but that's just a crystal ball reading. Risk off in Bitcoin. Bitcoin going down 2.2% today. And while more people have never apparently been short the dollar or bearish on the dollar, there was a survey put out recently. I saw someone talking about in people that trade currency markets, there have never been more people bearish on the dollar. And so, of course, the dollar has to go up. And then put this into the light, the chaos going on in the Middle East. And so, yeah, there's a bit of a run to the dollar. Me and many people were curious if, even Lynn Alden talked about this. I can't believe she talks. She doesn't normally even look at very many charts, but she mentioned this one, the DXY, this being the fun zone where, is the dollar about to break to the downside or not? And it's not. We bounced off. It looks, maybe this will act as a base and maybe the dollar will go higher from here. Hard to say. I am one of very few people that doesn't think that the dollar is bound to completely go down here. Remember how much debt there is denominated in dollars. When people need to pay their dollar denominated debt, they need the dollars. So, that's how I see it. And with more risks pending, more dollars, I think, are going to be needed here where we are currently. Anyway, crude oil went up by 4.5%, now $75.34 a barrel. Again, sort of preparing to perhaps go even higher or go down, really, depending on what's going to be happening in Iran. Dr. Copper, with a PhD in economics, is being patient here. He's like, you know what? I don't know if things are getting better. I don't know if things are heating up. I don't know if things are cooling down, so I'm just going to sit here and do nothing. This is one of the wisest markets. I think this is one of the, if you didn't have time to check any other chart on a daily basis, I would say copper is the most important one, and he's not budging here. Silver skyrocketed a little bit to the upside today, going up 2.28%. Remember, we have been consolidating sort of in this bull flag. We popped to the upside. I am very surprised about this, only because we had news come out today regarding solar companies. This is from Reuters, their headline: solar stocks plunge on Senate proposal to phase out tax credits by 2020. Solar power is one of the largest consumers of silver. You would think that news would make silver plunge. I don't understand what's going on in silver. Every other market today made total sense. But silver, outside of the fact that we had this pattern developing and it broke to the upside. I mean, yeah, it's a bull flag and it broke up to the upside. But with the solar stock news, I don't know, maybe a little bit complacent here. It's why traders are talking about shorting around, $37.60 to $38. Another chart that really caught my eye today was actually the spot price of uranium popping up from, we were just going sort of sideways around $69. We popped straight up to $76.20 today, a pound for uranium. So the news on this is that this is from marketindex.com.au that the Sprott, this is the a trust, so an investment vehicle that you can buy someone to hold uranium for you. They're loading up on uranium right now, purely for investment. This isn't nuclear reactors, uh, you know, suddenly ordering tons more uranium. Those contracts, by the way, are very long. Uh, so whenever you're looking at spot prices of uranium, you got to take them with a little bit of a grain of salt as well. But the fund, I believe the fund that basically doubled their holding, SPUT. So and I've been talking. If you've been following the show, like it seems like it might be a decent time to start shorting or looking at shorting uranium. You look at one of the biggest companies, Cameco. Their PE ratios are just outlandish, and they are not going to up their prices to the point where smaller miners can start taking market share of that industry. So, I mean, I was a big uranium bull for a while, and it's fun being a uranium bull. It's a cool metal to be involved with, but when it starts getting overly popular, like it obviously is right now, that's the time when I'm going to be stepping back and actually looking to possibly short. Once your regular person starts getting excited about investing in something, it's like, uh-oh, it's either the beginning of a bubble, or you're somewhere, you're just getting into the bubble arena, let's call it. Anyway, moving on. Another chart I've been wanting to share for a few days that has been really catching my eye. I should have brought it up sooner, but it just keeps going up. This is the Skew index. This is it's sort of like the VIX, but they're further out of the money put contracts on. I believe it's mostly S&P 500. It's been skyrocketing lately, so we're getting a wave of investors. And not only that, so this is higher than. Do you remember how crazy how the market like tanked in April because of the Liberation Day? The Skew index was not all that high at the preparing for it. The Skew index was high, thinking like, uh-oh, something's coming, and then it hit and the markets crashed. And then instead of the Skew, like people reaching further and further out on put contracts being like, yo, it's going to keep crashing harder, it went to the downside. And just notably, we haven't been this high in the Skew index since late February. In other words, there's a lot of interest right now in people loading up on betting that the market is going to crash, actually. So the premiums on black swan event type of things it's going up right now. Now with risk off, stocks going down, especially in light of retail sales being weak. I found it interesting that utilities went down by 0.8%. Utilities is supposed to be one of these places you rotate into, like, oh, maybe Bitcoin's not going to double, every year. Maybe I can put something into something a little more safer, like utilities, like the company that makes electricity for my house, because I'm probably going to keep paying my electric bill. That didn't go up. That's a little concerning. When it's just like there's all these signals, these recessionary signals going off today, left and right. And this is just another one of them. Higher risk in utilities is like, that's a real bad sign. Add to that consumer staples as well, dropping by 0.85%. And again, normally when you have risk off, volatility increasing, you might want to see people rotating into consumer staples. If people can't even afford the regular stuff that they need, consumer staples being just food, regular housing, just stuff that you need, that's a bad sign. Again, main thing to look out for coming up tomorrow morning, we have the jobless claims. They've been elevated, and soon as they cross certain thresholds, you better watch out below. But what do I know? I'm just a guy with a crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.